Hello everyone, welcome! In this video, I'm going to be sharing with you my thoughts on where we could be seeing things move to next, given information that I have right now, okay? So some of you may already know some of these things or all of these things. Some of you guys might be totally out on the loop, but I think it's important that you're aware of these circumstances moving forward so that you're prepared in case this stuff actually does start to head further south. I'm hoping that it doesn't. Honestly, I really hope that it doesn't. I hope that we can get back onto a bull run because as you guys can see from Bitcoin's price right here, it's been dropping down for quite a while now. I think a lot of people are getting really burnt out. The sentiment is also very rough, but let's go ahead and get on into it quickly. Disclaimer, I am not a financial advisor. This is not financial advice. Everything I'm sharing is my own opinion. It's my own research. Please go do your own research as well. I'm just one person and one person's opinion, okay? So taking a look at Bitcoin's price right now, we can see on the weekly chart, it is down quite a bit. We had 9 weeks in a row of red, barely had any green, and then now we're starting to see it drop further. You look at the bigger picture here, what do some people see? They see what's called a head and shoulders pattern. Now this is a bearish pattern. This would suggest that we're likely to see the price is going to keep dropping down. But when we zoom out here, if you take a look at this bottom line, this is called a Fibonacci retracement. We can see that this end over here that I established that matches up pretty well with that flat line, right? We only really start to see a pickup pushing up right around here, around October 2016. It kind of started to climb, and then it got really hardcore. Then we saw another big push up going here. So we take that as an overall baseline, which is essentially using $0, right? Approximately $0 is a baseline right there. This Fibonacci retracement shows we already broke down past the 0.618 on the Fibonacci level, this right here. So the next level that we would have to contend with would be the 0.78. So that 0.78, if we look at the price, that's around $15,000, about $15,000, $15,100. Before that, the big one people need to pay attention to is this right here. This is $19,700. It's basically the $20,000. This is the previous all-time high that took place around December 2017, moving into the January of 2018 period. And during that time, that was in the previous halving. So one thing we want to try and double check on is that the trend has a continuation. What I mean by that is that we have not seen, this is what I've been seeing reported. Maybe I'm wrong on this. Maybe they reported it wrong. I hope I'm not sharing false information. From what I have learned, we have not seen us break below the previous high during those bull markets of the halvings, the previous ones. So every 4 years is when the halving takes place, right? We saw this price back in the previous halving. Right now, the question is it going to drop so low that it actually goes below this level? There are some contributing factors here for sure that are in place, but if you're thinking this is going to drop down lower, keep an eye on $20,000 for multiple reasons. Not just because of this here, it's because of the psychological point that it's 20K, people wondering if it's going to go below into the 19K range. If it drops below 19K, then people are wondering if it's going to hit 15K, which ironically matches up with the Fibonacci retracement. And it's also psychological level, right? Every 5,000, you're kind of like, is it going to hit the next 5,000? Is it going to hit the next 5,000? You get the point. Now let's go ahead and go over some of the article information that we have here. JP Morgan, this is coming up this week. This is on Wednesday. A lot of people are wondering if they're going to be raising the rates by 75 basis points. It says here the true surprise would actually be a 1% rate hike, something a JPM economist sees as a non-trivial risk. Let's go ahead and read through a little bit of this. Economists at JP Morgan and Goldman Sachs said in client notes Monday that they now expect the Federal Reserve to raise its policy rate by 75 basis points on Wednesday. So this has not happened yet. What we're seeing is a lot of people being aware of this upcoming, taking that into account, and some people, it is factoring into their decision making. Not everyone, but it is obviously having an impact. JP Morgan economist Michael Feroli pointed to the startling rise in longer-term inflation expectations in a Friday consumer sentiment report in a Wall Street Journal article on Monday, suggesting that Fed officials wouldn't be, quote, constrained by their previous guidance of a 50 basis point increase as reasons for his revisited forecast. Of the Wall Street Journal article, Feroli also said, quote, one might wonder whether the true surprise would actually be hiking 100 BP, something we think is a non-trivial risk. in a Monday client note. A 100 basis point hike would increase the Fed funds rate by 1% from its current 0.75% to 1% target range. Our best guess, Goldman economist wrote, is the article is a hint from the Fed leadership that a 75 BP rate hike is coming at the June FOMC meeting on Wednesday in a Monday client note. Market participants largely had been expecting a 50 basis point hike by the Fed this week. Since Friday's inflation reading, however, stocks have tumbled. So it's not just affecting crypto, landing the S&P 500 index down 3.88% in a bear market on Monday. It then goes on to read a little bit more. Then we're looking at the cryptocurrency market, right? We're talking about crypto here. This does affect SafeMoon, it affects Bitcoin, it affects Ethereum. I mean, it's basically affecting everything, right? So one of the big contributing factors recently was Terra Luna. I've talked about Terra Luna in some previous videos, and now there's even more incriminating evidence against the founder, Do Kwon, allegedly, right? But it's not looking good. It really looks like he was up to some nefarious things based on what people are finding. Again, I've reported on some of these things. So then we have this right here, which also had to deal with Celsius. If anyone has dealt with the stuff with crypto, look, you want to see my reaction here? With Celsius. If you guys have had to deal with stocks back during the pandemic, and we saw what Robinhood did, some other traders did, they halted trading. And guess what? Celsius did the same thing. Now you got a lot of people pissed off, and some people are looking at it and being like, oh, it's kind of good because people are not being able to mass sell their crypto. But at the same time, if you got your crypto on a platform and you're like, oh yeah, by the way, we're not going to allow you to take out your money when you say you want to take it out. Do you really feel like you want to keep your money on the platform? Do you really feel like you're going to support their own independent crypto? There's going to be a lot of people that say that went too far. Some people maybe even looked at it and said, look, I wasn't going to take my stuff off of your platform, but I don't feel comfortable with it now. So as soon as you hit the go light, I'm getting out of there before you do this again, before you get liquidated, your whole company goes belly up. You're going to have people that have concerns like that. So they put themselves in a very precarious situation, and I mean, it is what it is. Cryptocurrency sold off on Monday as trading platforms halted withdrawals and crypto company cut jobs. Yeah, a lot of jobs being cut. The market cap of crypto has fallen below $1 trillion, down from $3 trillion at its peak in November of last year. It hasn't even been 1 year since then. The sell-off in cryptocurrencies comes as investors rotate out of risky assets. So it talks about the Celsius contagion effect. For weeks, concerns has been growing that Celsius, one of the more popular crypto staking and lending platforms, is in the midst of a liquidity crunch. Celsius offers users yield of up to 18.63% on their deposits. So it's a high incentive, right? You say, hey, I want to go over there, I can get some high interest. It's like a product a bank would offer, except with none of the regulatory safeguards. Celsius Cell token, so I mentioned earlier, they have their own token, dropped from over $7 to about 33 cents in the last year. And it's down more than 50% in the past week. Celsius is the biggest holder of the token. Meanwhile, the company's $26 billion in client funds has more than halved since October. Celsius has previously admitted to losing funds, though it didn't specify how much, as a result of the $120 million hack of decentralized finance platform Badger DAO. Early Monday, Celsius shocked the market, announcing that all withdrawals, swaps, and transfers between accounts have been paused due to, quote, extreme market conditions. In a memo addressed to the Celsius community, the platforms also said the move was designed to, quote, stabilize liquidity and operations. Again, continues, quote, we are taking this action today to put Celsius in a better position to honor over time its withdrawal obligations, end quote, the memo said. So, look, they're trying to manage it. You're dealing with giving people interest rates. You got a massive amount of people that are trying to flood out. Well, where do you think the money comes from to be able to pay out these interests? If everyone tries to leave out at the same time, it causes an issue. This is also in the banking system. It's called fractional reserve banking. If everyone went to the bank and said, I want to take out all of my money that's in the bank right now, the banks literally cannot do that because of the fact that they lend out your money to other people, i.e. loans, right? Oh, I need a car loan. I need a house loan, like credit cards, those kinds of things. Where does that extra money come from? It comes from people that already have it, but it's being circulated out in a way that it creates this imaginary presence of money. And so when things head south and everyone's like, I want my money back, it's like, we don't have all of your money. We didn't really expect everyone to come at us at the same time. So we got to do these other things. Otherwise, we don't exist anymore. And then what do you do? If there's no banks, if there's no cryptocurrency markets, if there's no, how do we live? What do we do, right? It's a whole slew of issues. So it's kind of like you need to kind of stop it, but at the same time, it's messed up that they're trying to stop it. And what are the other alternatives to this kind of stuff? And should they have taken different approaches to it to begin with? There's just so many questions. But obviously right now, people are in panic mode. You can tell that the Bitcoin fear and greed index is really low. It's probably going to keep getting lower because people are really nervous, primarily with what's coming up on Wednesday. I think this is one of the biggest things that people that are in the financial market are going to be paying attention to, is to see what happens on Wednesday. So guys, strap yourselves in. It's a rough road right now. We're in this together. I still have investments in stocks and in crypto. I'm being affected by this too. But guess what? This stuff moves in cycles. At some point, we're going to hit the bottom, right? Where is the bottom? We've been going down for basically 6 months now. We got to be getting fairly close to the bottom, which also means that we're also close to the dawn. It's always darkest before the dawn. That slow bandage peel that's been going on. I'm at a point right now where it's almost a sense of relief to see things finally just pulling down, because I feel like we're getting really close to the point where we can start to see the recovery. But we have to wait and see. Let me know what you guys think in the comments down below. You think crypto's done, or you think we're right around the corner? I do have a referral link for MEXC. It's a cryptocurrency exchange. They have a massive catalog of crypto if you guys want to go do trading on there, which includes SafeMoon, Bitcoin, lots of crypto. You can check out that referral link. Again, this is not financial advice. Go do your own research. And if you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. And also, I can't forget about my patrons. I mean, I know the video's slightly long right now, but thank you very much to Velimir Brakovic, We Love SafeMoon.com, Murad Shaker, Victor Vegas, and SafeMoon Oz for being higher level patrons. Also, thank you to my YouTube members. You can click the join button down below if you guys would like to show your support there. I really appreciate you guys so much. I hope this video was helpful for you. If you did like it, please make sure you hit like, subscribe, like I said, if you want to see more cryptocurrency content. And God bless you guys. I will see you in the next episode.